It is November and we are starting the swell event. Incredible announcements are coming and it's just starting. So if you have a thought process like, okay, based on last swell events, what were we doing? Should the price go up or will we be staying here? So these are your swell events. Say you got from 2017, 18, 19, 20. Now what will you expect or anticipate for this November? If you compare all of those, you're going to get an idea of what really is going to happen. In recent videos, we went through a ton of fundamental stuff. But again, this is adding on to the fundamentals which already exist with Ripple, the company, XRP ledger as a protocol and a ledger to clear everything. That's happening now. Ashish Birla here highlights that we've been using this product internally for 2 years. Now they're putting it out for all the customers. So that's great news. Now, if you want to follow that, you can follow and clearly highlight this. At a time when SEC is making all the fuss, you see Ripple the company standing straight and putting this one out. This is really great because Liquidity Hub shows you that it's about the crypto. It's not just RippleNet, and it's about using tokenized assets and using the creativity of XRP ledger and the infrastructure connected to it, which extends through ILP. So now you have a lot of different assets, including all the different proof of work and all others which can bring in liquidity into the market. That's important. So as you see these kind of announcements, you're now looking at the price. What can the price do? Yes, if you are trying to take a peek of what's happening in the market, we had a double bottom, we went up, we consolidated, we broke higher, and we are holding on to it. Now, if you take a consideration of what we have done and how each of these pumps varied, you will say, okay, that has happened. What can I anticipate from this? So there can be like different cases. Say one, you can consider like this. When we were going up, each time, you can actually take inside this bull run. First it was 21 days, then 14 days, then another 21 days. So if you're going to put the maximum, say another 21 days, that's great, right? We may hit those numbers. Now that's based on history. Now, when you're actually looking at this, we are measuring the ROI. Say from the first one, it's like 84 days taken to reach 40%. Okay, not bad. But the next one, it took 120 days closely and we reached 113%. So 119 days and 113% to the upside. So that's now getting closer. That's even better. Next time, we took like 133 days and we went up 150%. So this time, it's more than the number of days taken in percentage. So this is just common sense kind of stuff when you're looking at the number of days taken and the ROI to the upside. Right now, we are like, okay, fine. If you extend that one, you goes to like 250 days. And right now, if you look at it, it's really somewhere around 210 days. Okay, 219 days. So if you put that number into the perspective here, what you get is at least 250% from the break of that 1.5%. So that is actually big. Again, you're going to look at these targets and the number of days taken when XRP moves to the upside is much, much less than you think. If you are waiting for a big run and then I'm going to enter when the volume is coming in, that can be like you saying, okay, I'm going to enter somewhere in the middle. So if you are going to see 150% here and you're going to enter, you're going to get 150. Okay. But those people who entered at the bottom, they made much more than that. So if you're looking at this one, say, yeah, we had 40% run. But if you're looking at from the bottom, it was 88. Yes, we had 113% run up. But if you take up the bottom to the top, you get to 40%. So that means it's kind of doubled in that two scenario. Now you come to the next one, it was like 250%, but here you get like 10x. So that's 4 times bigger than what you saw previously. So the impact of coming in and buying at the bottom and having patience and holding on to it as the price moves higher, waiting for that one big blast, make the difference. Because when you are here and you get this one big blast and you continue on, try to take your profit somewhere at the resistance. Now, why that resistance? We have been following that resistance from last 540 days, right? We have been touched it once, twice, we came back down, we went up, we tested it, we came back down, we went up and tested it, we came back down. So chances are we're going to go and touch it. Now, right now, if you take this, if you imagine a straight candle going up to hit the resistance, you're somewhere near $6. But it never happens, right? You take at least a couple of candles, 3-4 more candles and reach there. So if that's the case, you're looking like $7, $8, $9 mark. And as long it take, the upside increases. So when the time taken for the consolidation increases, the time to the upside decreases and the ROI to the upside increases. That's a great stuff for all of those. Why? Because this market has a lot of room to the upside. This is altcoin market on a weekly, and it shows you that we can easily go up to the resistance. We've been following this, similar to that of XRP. Now what that means for us is we are breaking to the upside. We had a cup and handle pattern. Now we are just near that blast through the roof. So if you look at this, we had slow movement to the upside. We got a pump, we consolidated, and then we started grinding. From there you got big candles. So when you're getting those big candles, it's like, that 3 soldiers moving up, as in technical analysis we call it like that. So if you keep this in mind, the market, all coins can triple in value from what it is now. And a lot of coins which went up through the skies, they're going to consolidate, they're going to go down. So the money made there is going to be moved into bigger assets. So you see micro caps blasting, 10x, 15x, 50x. They are going to be slow and being in a correction mode. As big coins move, people take their money in and put it into the safe asset. Yes, it makes sense, right? You go into a risky asset, you make a lot of money. Now you want that money to be with you. You don't want to put it into another risky asset and lose all. You would most probably funnel that back into a fundamental asset and grow it 5 times, 10 times, rather than looking at a risky asset. So that makes sense. Why? Bitcoin dominance is dropping. And now it has been dropping from 2013, so I don't know what others say, but that's the reality. You look at the chart, you never had that higher high where you are trending higher above this resistance. All the time you go back up, you test that, you fail, you come back down. Now, if this trend continues, as we've been saying from a long time, we are going to go back down here. And this time it can be super bad for a lot of guys if it drops below 30. Those who are in Bitcoin, those who are in any products, futures, whatever related to that, it's going to be a massive carnage there where it won't be good, because at that time you'll see fluctuations in a lot of different assets which is tied up with the liquidity in Bitcoin. People will have issues. So when you're looking at that stuff, and right now what you can anticipate, yes, Bitcoin is going to continue higher. Bitcoin dominance going down doesn't mean Bitcoin price going down. Keep that in mind. Bitcoin can still go to 78, 80, 85, and Bitcoin increasing 15% at a time when the altcoins move higher 50%. That's a huge difference. Then you see Bitcoin moving 100%, reaching $125,000, and at a time when you see all coins are doing 10x. So it's up to you where your ROI is. So if you're someone from US, yes, you don't have much of a clarity. You really have to look at Bitcoin, Ether for institutional use cases, institutional purchases. But if you're a retail guy, you don't have all those issues. You have a lot of different exchanges where you can literally get a lot of different assets. And in this market, believe me, there is a ton of opportunities. If you just go look at what's happening here, we've been tracking, say, IOTX, we've been tracking LRC, we've been going through all this, Zcash, Dash, helium, a lot of it, we are hitting our targets. Now, why? Because we get positioned when all others say the market is going down, we get positioned there. That's the only reason why we operate like this. If you have patience, yes, we are hitting our targets. We are taking profits as we go higher. Now, once you enter into an asset and you get an idea like, okay, this is moving as anticipated, this is my target, you now is an investor. You can think like an investor. While you take profit from here, what are you going to do? Are you going to move it into a different asset class, or are you moving in same asset? And if so, what are you looking at? Now, a lot of different coins would be pumping, and if you are sure about where you're going to move, you do have to look at the liquidity, volume, and all the other steps which we usually explain. And if you want kind of updates for these, you can definitely look at the Patreon. The link is given in the description below, where you're going to get the maximum value. Now, why do I highlight that? Because this is the start of wave 2 of altcoin market. I don't know how you digested that. That's big stuff. Because if you've seen what you had or how your portfolio grew back in April, May, in that peak of wave 1, we are going to see 2 to 3 times that, a minimum to 10 times in different assets, say an average of 5 times that. So if you made 10x in wave 1, you're going to have 50x if you are in the same assets, and if you have averaged down, you're going to get even more. But if you have changed to different assets completely, now that's hard to predict. You'll have to check individually for those assets how they did in wave 1, what you can anticipate in wave 2. So in wave 2, when you're going to see all these assets going crazy, you don't want to be in assets which are going to be super slow. You don't want to be in assets which doesn't have much of an upside. You would be probably looking at assets which have a lot of upside, and as you make money, you are reducing your risk. So you go to the return rates, easy stuff. You go here, look for the quarter, and you see a lot of coin there which has possible upside. At the same time, you see a lot of coin which went super high. You can literally avoid them, right? There would be a time to invest in one asset, and there would be time to take profit at once. So if you understand what investing is, you would be taking profits from those coins which went crazy, which went super crazy. Like, you have opportunity here, then some of them still have a little bit of upside. If that compounds your profit, it's fine. You entered so early, your average is so low. If it goes a little bit, you're compounding, that's fine. But if you're a new guy entering into that asset, good luck. But this is what we are here for, right? XRP. And as we look at the charts, it's crystal clear for anyone that we are breaking higher, and we are going to continue higher with the indicators suggesting we are moving, we are going to do well. You know, the MACD crossed to the upside, we are trending to the upside, we are in the positive territory. And look at the RSI, it's trending higher. Each time we come back down, we bounce. So now you have 3 touch in the same line, which makes it valid. So that's great. Now we are waiting for a impulsive movement. So when people look at Elliott wave structure, where they get confused is a place where they actually see like, okay, this is the upside, this is the downside. So consider like this: in Elliott waves, you'll have a motive wave to the upside and a corrective wave to the downside. Inside the motive wave, you can be impulsive wave. I'm more focused on impulsive wave because most of the assets which we follow, especially XRP, has impulsive move in it. The nature of that asset is like that. If you look at this, all the movement in this bull market, you'll understand what we are trying to highlight. You know, you took like 10, 15 candles to the downside, consolidation, blah, blah, blah. But from there, just 4 candles took you to the upside. If you look at this one, just 2 candles took you to the upside. So that's on a weekly. Now, if you look at this one here, you just had 1 candle with those volatility. Now, you literally grinded each other week with little bit of gains, but 1 week made the difference. Same here, right? So same stuff, you're going to see 5%, 10%, 15% growth over a week, another week, and then 1 week it just goes 100, 200%. Now imagine you're going to move from 1.2 to 1.8, slowly grinding, and then a blast directly to $5, $6. You would be surprised if you are moving into a different asset because this is slow right now. That's a decision which you should be taking before you look at your portfolio. Imagine what it's going to be after wave 2. Because if your portfolio is aligned in a way that you are like 70% in fundamental, 30% in risky, now you have, that room to rebalance well. But if you are in 70% risk and 30% fundamentals, it's going to be super, super risky because this is crypto market and you are heavy on risky assets. Now, the same stuff when you are looking at the XRP, you can literally see a trend which is forming here. You're moving to the upside and you usually know the third one here is going to be the blast. And that's where you're going to take some of your profits because we are going to correct back down before we continue higher. So that's where you make money. Now, it's not happening in a day or two. As it continues higher, you're slowly taking your profits, keeping it aside as dry powder. So when the price comes down, you're aiming and shooting for it. So that's a great stuff. Now, what are you eyeing for at first? The resistance level. You can take a standard deviation a little bit up, a little bit below the resistance line and ensure you take profits, because I've seen a lot of guys who have put money into the market, but they didn't take it at the right time. They didn't even take a small amount of it. So that was a bad stuff. In wave 1, you had opportunity, but you missed it. Now in wave 2, I want to make sure you're not missing that. Now that is the reason why I post regular updates on my Patreon showing this is where you are with this asset, you're reaching your target, consider taking some profits. All of those are important. So if you want to get those updates, please do check out the Patreon. The link is given in the description below. If you receive value for your time, please do support the channel, hit that like and subscribe button. I'll meet you guys on the next video. Bye for now.